Hi, this is Optimus Futures, and we're back with our weekly roundup of key futures markets for our viewers. Last week was a particularly interesting one for a lot of markets across the board, where we did see a lot of really interesting price moves and market movement in general. We will, as usual, be starting off with the S&P 500 E-mini futures market for this week, and we will be analyzing the markets as they closed on the 7th of December 2018. So the S&P 500 market here at large has or continues to be in this more choppy sideways trading environment. We're of course seeing the market basically consolidate and be volatile between the 2800 round number that runs right around here, right where we've drawn this green arrow over here, as well as the 2600 level, which seems to be acting as support for this market. Of course, the level itself is actually down here, but the support and resistance level the market has been using here has been just above the 2600 level, right where you see we had these very prominent two occasions where the market bounced off this level of support and resistance just above the 2600 level. We did have a strongly bearish trading activity for this market the last week, and we did see a very strong close pretty much at this support level and this area of horizontal support and resistance. Interestingly, this week the market is actually opened underneath this level of support and resistance, although we do note that the market is actually still above the 2600 round number, which is of course sort of the lower end of this entire area of support and resistance around this area over here. We did of course have a candlestick low pretty much just about touching the 2600 level before we had that really high profile bounce off of the 2600 level. Of course, as we stretch the 2600 level further down to the back here, we can see that of course it in itself is a very prominent area of support and resistance. So even though we note that the market itself here has not exactly penetrated the 2600 level, it sure is on course to try to do that possibly early this week, especially if this momentum here towards the downside is able to sustain itself. We did have a very strong bearish week last week for this market, and if this momentum continues, we wouldn't really be surprised to see the market actually drop underneath the 2600 level, which in itself would be a very impressive achievement for this market from the seller's perspective, of course, because that means that if the market actually pulls back and then the 2600 level here turns into resistance and allows for the market or allows for the buyers to not be dominant again, we can actually have the market dropping in furthermore, pretty much putting the entire S&P 500 market here in the red for the year, which would be a very interesting development, especially how the market was actually really strongly uptrending in the initial part of the year. So of course all of that remains to be seen and will depend almost entirely on the 2600 level here and its ability to either hold or not hold as support here. So far we are looking at continued bearish activity here. Of course the candlestick here is open and we're again seeing selling cover the market, so it should be interesting to see if the 2600 level here will hold as support or will not. Okay, so the next market we're going to be looking at here is the light crude oil futures market, and you'll notice that we're looking at a more bird's eye view for this market, and the reason simply being that where price is trading right now, it sort of makes sense for us to be looking at the bigger picture, because these levels really line up with long-term support and resistance levels, and so we'll just give our viewers a better perspective of why where price is trading right now is an extremely important and a historic group of price levels for this market. So of course we have the $1.50 major round number here that runs right across this entire period of consolidation way back in 2016 and 2017, and of course we've had multiple horizontal levels of support and resistances that run pretty much at and around the $1.50 round number as well. And so no surprises at all that as the market actually plummeted hard into the level, it held as support. If you've been following our analysis for this market over the past few weeks, we've been talking about the importance of the $1.50 level and why seeing the market stall at this level or even bounce off this level wouldn't really come off as a surprise to us, even though we really saw some really intense sell side activity for this market, and the bears were pretty much dominant all the way into this down move, we really didn't see any kind of pullbacks at all, except maybe a minor one over here that didn't count for much at all before sellers really just dominated again, up until the point where the market actually hit the $1.50 level and then it rebounded. Well, last week pretty much revolved around the same theme. We didn't see a volatile pullback back into the downtrend over here, but we're also not seeing the sellers really take on the market and try to push underneath the $1.50 level, which sort of makes sense because the $1.50 level is of course quoted often by economists and analysts all the time when referencing the light crude oil or the crude oil market in general. And so this level is a very, very important psychological level, which partially or in fact majorly explains why the market seems to be holding at and just above the $1.50 level over here. And that theme pretty much seems to be going on even in this week. We're not seeing any major activity in terms of dominance from either the buyers or the sellers. If you just zoom back in to look at the current price action, you'll see a lot of candlesticks that just represent indecisive market action. We're seeing wicks on both sides of the body of the candlestick, and just no clear direction of sentiment or definitive market direction as of yet. And once again, a lot will depend on the $1.50 level and its ability to either hold a support or not. If the market tries to continuously test the $1.50 level, that may actually be a potential indication that the market wants to eventually make it past the $1.50 level, maybe pull back, use it as resistance to continue its way down going into the end of the year and possibly even in early 2019. And that should be really interesting to see if the market actually drops underneath the $1.50 level. The flip side, of course, is that if the $1.50 level here continues to provide the needed support that that is necessary for the market to rebound off of this level, we will then see, or we should typically see definitive bullish price action over here in terms of maybe a bullish engulfing candlestick pattern or a bullish pin bar with a wick protruding towards or underneath the $1.50 level over here. So we're looking forward to how the market will pan out going into this week, but as of now we're still finding this market really caught up in and consolidating just at and above the $1.50 price level. Okay, so the next market we're going to be looking at here is the Euro futures market. This is another market that seems to be, for the most part, indecisive, where we did not see any major price action either to the upside or to the downside being posted in the last week. And going into this week, we see the market has actually opened at a very neutral location again, and for now isn't really moving much at all. And that can partially be explained by the fact that if you recall analysis for this market from the week prior, we've been talking about how we see this market potentially entering into a wedge pattern formation over here, and that's possibly what we believe is holding price up here, and price is really just tightening into this wedge pattern that is centered around this all important support and resistance level. Of course, we've had multiple indications, two at least, where price very obviously and conspicuously bounced off of the level and then just consolidated up and down until it just tightened and squeezed. Interestingly though, if we are to look at this market as tightening inside of a wedge pattern, we're pretty much seeing this wedge pattern as extremely tight right now. And if you look at the market as of right now, it's actually trading very near to the high, or pretty much at this descending resistance trend line that's part of the wedge pattern formation over here, which makes for a very, very interesting development. If we do see some momentum being injected in the market here, we may potentially see the market actually break out towards the upside over here if the bullish momentum is able to sustain itself. The only trouble with that perspective though is that even if the market actually breaks towards the upside, we do see a lot of hindrance here in terms of other support and resistance levels in the vicinity. Of course, we have the 1.15 and the 1.16 all important support and resistance levels over here that may actually hinder any attempts from buyers to take price further up north. On the flip side, we have been for a while sort of expecting the market to actually continue its way to the downside. We've witnessed this market pretty much being in a downtrend for the most part of this year, and even though we had a very elongated period of consolidation, which sort of still lingers on. We would actually still be more interested to see the market actually break underneath this level of support and resistance, and actually maybe use it as resistance to continue its way down closer towards the end of the year. But of course, what our expectations are from the market will really not determine where the market will go, right? The market is, for the most part, on its own and always has the ability to surprise us. So the interesting thing and the most notable thing here for this market for us right now is the fact that this market could potentially be looking to break out of a wedge pattern formation, and could be towards the upside or the downside. For now, it seems that it could be towards the upside, but we will see how that story develops and if at all it does. Okay, so next up we look at the gold futures market. Another very interesting market to follow last week, simply because of the bullish price action that we witnessed. First, market passed a very important support and resistance level that was sitting pretty much at the 1240 level. So if you recall our analysis for this market from the prior weeks, we've been talking about the importance of the $1.40 support and resistance level, a very obvious and a very dominant support and resistance level with multiple indications of price either finding support or resistance of the level. And the week prior, we had been actually talking about how all this consolidation and build up towards the upside could eventually mean that the market will really test the 1240 level and possibly look to break it towards the upside. We have been looking at some of the foundations here being laid for a typical uptrend. We've been seeing higher lows over here. As you can see, this low over here was actually higher than this low over here, and this more recent swing low was actually higher than this previous swing low. We were also looking at higher highs. Of course, this high was actually lower than the more recent high over here, and now the market clearly seems to have made another high that is higher than the previous one. So that tells us that even though this is not exactly the most strongest of uptrends, it technically can be defined as an uptrend. And so that build up towards the upside actually did help the market break past the 1240 level. And if so, this level continues to actually provide the needed support to the buyers here, we could actually see the market continue further up. Other important levels in this area over here, we believe could actually work as or serve as short-term targets for where the market's headed. And for us, that level, the most immediate level here, should be just around here. We see a very dominant area of support and resistance, of course, tons of support here, and then later the market broke through underneath this level and actually used it as resistance as well later on, and we believe that that's where the market could potentially be headed here if this momentum towards the upside continues, and of course if the 1240 level here continues to hold as support and provide more opportunities for buyers to get into the market. Okay, so finally we look at the 10-year Treasury note futures market, which to us was one of the most interesting markets to follow the week prior, especially because we saw the market pretty much unfold as per our expectations. Of course, you can see that there was a lot of bullish activity for this market, which did take a lot of heat from the weakness in the U.S. equity sector, and of course the S&P 500 market that we talked about earlier being extremely bearish last week. And so that partially explains why a lot of investors were buying into more safer government T-bonds and Treasury notes. For this market, we have been talking about the importance, of course, of the 119 level, here being a very obvious support and resistance level, and tons of indications of the price either finding support or resistance of the level. Last week, if you recall, analysis, we've been talking about the hold up just above the 119 level here. So even though we didn't see a lot of buying come in straight away as the market broke past the 119 level, we also didn't see a lot of interest from the sellers in taking price back down underneath the 119 level, like it happened back here where the market bounced pretty precisely off the 119 level. And so that gave us a little bit of a hint here that the market could potentially be looking to carry on the momentum towards the upside a little bit more. We also identified last week that if the market was to hold at the 119 level, there really wasn't a lot of resistance that could potentially come into the way of the market here, except maybe the 120 level, which is again a round number and an area of support and resistance as well. Interestingly though, last week we not only saw the market touching the 120 level, we saw the market pretty much penetrating past the 120 level with relative ease, with pretty much no selling or no holdups coming in at the level at all, basically ensuring that the market just continued its way higher. However, that said, going into this week and pretty much right where the market is open right now, it seems to be perilously close to another extremely important level of support and resistance. Sorry, it's majorly resistance, to be honest, over the recent past at least, where we've had some very solid indications of the market actually rebounding off this level. And so the market here seems to now be accelerating into this level, sort of similar to the action that we saw earlier when the market was pretty much at this level the last time. So that should be really interesting to see if the market here, as it accelerates into the level, will we actually see major selling come in the market to take price further back down, or we'll actually see a continuation of this bullish momentum possibly past this entire period of resistance here. What we see as a stark difference between the current market action over here and what happened back when the market last tested this level was the fact that the last time the market was here and we saw selling come in the market, there really was quite a bit of empty vacant space here for the sellers to utilize and take price further down. However, here we see that if the market actually does test this area of resistance and sellers decide to come in the market, we actually may potentially have all of these former areas or swing highs here actually flip into support and allow for the market. Actually, we should just drag it further down to current price levels. You can see that as the market tries to rebound off of this major area of resistance over here, it could potentially actually find support off of all these former resistance areas and actually maybe retest this area of resistance, to say the least, and maybe eventually able to break past this level and use it as support to continue propelling price further up north. So it should be interesting to see what the market does as and when, if the market actually hits this this area of resistance that we've marked out here, as it is certainly a very, very important level, and this bullish momentum here does indicate that price should more than likely be able to test this area of resistance at least early this week, or at least this week.